If you're an intraday trader or a scalper, you guys have to watch this video because today I'm going to show you guys one of the most powerful concepts that you need to be aware of if you truly want to gain some good pips, if you want to truly make money with your intraday trading. So without further ado, let's get started. So over the last few years, I would say over the last couple of years, this box here has been described as one of the most magicful, like most craziest things that people have actually discovered, which is actually not that true after all, because I'll prove it to you why. Watch out. But basically, as I said on the intro, if you want to trade intraday, this is a must that you need to know. And probably you have seen that in so many other places where people talks about this box, what is this box, and why this is important. But what I'm going to show you today is gonna be like me giving you a step-by-step guidance on how you need to actually objectively evaluate this importance of this box. So now let's start understanding first thing first, what is this box and how people describe it on the trading. So the box is usually called the Asian range, the Asian box, right? So why this Asian range, Asian box is important. So let's start first thing first with the very basic. The Asian box, the Asian range, this is the session where most trader builds liquidity and is the slowest one among all the sessions. So we have three types of main session, the Asian, the London, and the New York one, right? So we all know this. If you don't, now you know it, the three major sessions. London and New York are the most important session that has most volatility in the market and are the one that manipulates the most, okay? While Asian has the scope or the importance of building liquidity for the intraday session, for the intraday decision and objective towards where price should be going next. But the biggest thing that people don't understand is that they only focus on this. They only think that, oh, you see the Asian session, you see what price is doing round there, and then based to that, whenever you see price coming to the next section doing something particular, which I will be explaining now shortly, then they just trade it, which is wrong. Because in reality, what you guys see over here, this box and this box, is none other than this wick over here on a higher time frame. So what is this wick? What is actually going on? So you guys must have seen many times when price keeps dropping or keeps going higher, as soon as this candle closes, right, the very next candle usually opens up at this level, it goes a little higher, and then it drops. This moment, exactly in this moment over here, in this wick, is where exactly you see something like this happening. So in a buy case, if you have a buy scenario, you're gonna see always this type of pattern happening. On a sell scenario, however, you have this is happening. Now, why I'm telling you this and why this is important? Because people are so obsessed with this Asian box, this Asian session, right? This whatever session they call it. Don't worry, I'm gonna go to the chart. Look at this. I got a lot of box over here. You guys can already see it, right? But before we go to it, I want you guys to truly understand why it is valuable. So here, as I said, before price even continues expanding to the downside, they do need to make this manipulation. And this wick can be all the way up here, up here, up here, or even here, right? So now why this is important is because if you understand this, you will understand something else very, very important that creates a lot of misconception and that unfortunately brings a lot of traders to take a lot of useless stop loss without understanding even why. Because if you go out there and you see all these guru, they will always tell you that the key objective on Asian box is always to have Asian low, right, that gets taken out. So in this case, Asian low gets taken out. And then once that happens, then what you do is that you take your trades towards the next direction, which is the opposite direction, which is in this case, the Asian high. So pretty much what people are trying to sell you out there, and trust me, they charge you a lot of money for it, I'm doing it for free literally, is that long story short, they will tell you all the time, oh, you got this box, right? So as soon as you see price expanding towards a certain direction, which is to the upside, then what you do is that you take the trade to the downside, taking as a target the Asian low, and vice versa. Although this is partially true, and I'm taking partially true because People are selling you this by saying that this is something that happens every day, every time, and it's a must, and it's a glitch, it's a mono glitch. No, this is a big BS. It's not a glitch, it's not nothing, it's same as any other strategy. And in this video is exactly what I'm going to show you how you can objectively actually use this to gain benefit out of this process. All right, so now this is pretty much the secret sauce that people are talking about. But that's not the reality, because many times, and many, I'm telling you many, you will see price going outside, right? Then retracing back into this box and then going higher. So what happens is that if you take a sell over here, targeting below this level, boom, that's a fat stop loss in your face. Okay, and that happens a lot as well. Don't worry, I'm gonna go to the chart and I'm gonna prove it to you shortly. However, the reason why this happens, right, is the reason why I started explaining you this concept over here. Because just basing on this specific box and pattern will not help you to make money if you don't understand where the true direction of the market is actually going. And here is where the biggest breakthrough comes into the place. By the way, before I continue, I will truly appreciate if you guys subscribe, like, and comment on the video, because I never ask in any of my video any of that. So if you guys are enjoying it so far, I will truly appreciate your support, because if you comment or like or subscribe, that helps the channel grow. And yeah, that's pretty much what I can say. But anyway, let's carry on and let's go back to it. So already by me telling you that why this low is not getting taken out, right, and that you should be focusing also on the bias, that should give you a click and should help you to understand, right, that okay, maybe that's the reason why sometimes price is not going through this level. It just breaks to the upside, retraces, and is going higher. Well, now what are we going to be doing is going to be going on the chart, and I'm going to be showing you the time where this pattern over here plays out and the time where this plays out, and how you should benefit using this concept. So let's go to it. Oh, by the way, another thing that I wanted to address is that I had a lot of requests of a lot of people asking me for mentorship. Guys, I'm so sorry. I don't offer any mentorship, because I truly believe that what I'm sharing on this channel, what I'm giving to you, is more than enough for you to actually smash it. Like very good stuff, very premium information that I give it to you here, right? People charge so much money for it, and I don't do it. I'm doing it completely for free. However, if you are interested, recently, based on the requests I had, I have opened up an exclusive group limited to only 35 people. And it's not a mentorship group, it's a network for traders. It's a place where people can get to ask, share, get in-depth feedback, in-depth insight, and so much more. If you guys want to take part of that, then the link is in bio, okay? Don't worry, just go through the form, fill up everything, and then if you are selected, because it will be limited just for 35 people, I want to keep like the quality and the standard of the group at the highest as possible. I already had a lot of application. I haven't chosen anyone yet. I'll be choosing people very soon. But if you show the hard work and the willingness of growing and becoming a good trader, then I'll be more than happy to take you on that. So fill up the form in the link in bio, and then if you're lucky enough, you will be one of the chosen. All right, so let's carry on. And by the way, remember, it's limited to 35 people, right? So don't worry, you don't have to be advanced, intermediate. Even if you're a newbie and you enjoy all my videos and content, just make sure to fill up the form and I'll pick it up then when we get the application. So what is it that we're saying over here? Check this out. We can start already from this one. You can clearly see that this one was very nice, because price exactly, this is the box and this is the session, Asian session, right? So now over here, you can see the price has taken the low during London, and I can promise you that if you jump inside, we can definitely see a very nice trade, let's say in 5 minute or M1, that we could potentially take to target where? Somewhere above the Asian high, right? So if we come over here, right, during London, by the way, look at this, it's so smooth. This was actually super clean. We got the box, the magic box, the so-called magic box, whatever, and then price comes over here. We have already a breakout structure this side, and then we got multiple breakout structures, so you had like multiple trades that you could have taken, right? So look at this. This is like picture perfect, exactly as the way I had my drawings. Now, let's say just randomly I place it somewhere around there. If you want to go more in depth, you want to refine it, just put a little bit above there. And the next thing you know, target exactly above here, dump 1 to 5. Easy peasy, nothing complex, nothing crazy. Like this literally was the picture perfect of the drawing that I did previously, right? So now you must be thinking, oh, is it always like this? Is it always like this? Absolutely not. And this is the reason why people lose so much money, because they don't understand, they don't get it. Look at this. Here again, we got the same things. We have the box, the Asian box. Now, people are obsessed with liquidity, inducement trading, whatsoever. But all these traders, they always neglect and forget the real direction and intention of the market. That's the reason why I always fail all the damn time. Now, check this out. This over here is plenty of liquidity, right? You got trend line, you got equals, you got Asian box, you got a hell amount of things. As soon as you see this movement over here, already in 15 minutes, right? What can you see next? Price is going lower, lower, lower. We open up around here in London session, and I'm sure that a lot of people probably bought around here, and they try to target where? Above the Asian high. Now, let me tell you why this is wrong. Okay, you might can say, oh, it has taken this liquidity, blah, blah, blah. Okay, beautiful. All of this is major range liquidity, right? Liquidity. So you do expect price doing what next? Pull back or going up or taking this high over here. Because once they take this liquidity to the left, they should be going to take liquidity to the up. But my guys, I'm so sorry, that's not the case. And how do you know that's not the case? Because you guys don't pay attention to the most single important things, which is this. Do you guys see how fat are these candles? Do you guys understand what I'm telling you is that there is momentum kicking in the market. If you don't see the same exact reaction away from this level all the way to the upside, there is no way that this price comes back over here and gives you profit. Most likely, you're going to have a lot of losses. So look at this. For example, here, I'm pretty sure from here, if I zoom out, this one might have taken out some sort of important liquidity to the left, right? And there we go. We have it. Look at this. We have this exact liquidity. Now, you might be wondering, how do I know that he has taken this important low over here? How did I know without even looking to the left? And trust me, it's not something I did even before doing the call. I'm doing it right now with you. You guys want to know how did I know that? Simply because I understood that as soon as price has taken out liquidity, look at the size of the next few candles. Do you guys see how this thing is pumping to the upside? Already this candle itself is telling me that, okay, the objective for the session has been fulfilled by taking the liquidity to the left. Therefore, now we're going to carry on pushing price to the upside because the next session is just in the corner. We had a little more manipulation over here, and then look at what happened afterwards, like right at the beginning of New York, right? So just based on the candle, I was capable of understanding what was going on next. And I swear to God, I swear to you, I didn't even check to the left. I just knew it based on the candle that something happened to the left. And that's exactly what happened. So those are the tiny things I'm giving to you now that should help you to understand what is primarily happening when you have this type of situations. So look at this. Again, we got the Asian box. Beautiful. Price comes down, London open, takes out liquidity, and you can see there is no fat candle. There is a nice wick over here. That wick itself is telling you that, okay, might be a stop hunt, so we go for buy. We did have also potential break to the upside in a smaller time frame. So if I go to 5 minutes, you guys can see this better, right? Look at this. If I go over here, look at this. Boom, break of structure. You got all the confirmation. You got also a very fat candle to the upside. But for some reason, price did not go there. And then it came back one more time to the downside, took out liquidity, all this liquidity trend line to the upside, right? And then, boom, break, entry, boom, target hit. Now, here is the question. Here is where most of the traders, they get lost and they lose so much money. Because I just stated to you that if you see size of this fat candle, right? After the liquidity has been taken, you know there's momentum in the market. You have a break of structure. You have all the confluences of the world for you to go buy and take this trade. So how come this did not play out? How come this was a stop loss? Because, and this is the secret answer that not many traders understand, because this is a bloody damn game of probability. Oh my goodness. I know, not many guru mentions that. Not many gurus will tell you, oh, this is a probability. I want to tell you is everything 100%, everything 100% win rate, everything whatever shit. Guys, this is a stop loss. Like, just fucking embrace. I'm sorry for, my language, but you guys have to embrace that. You guys have to understand that this is how it works. Because if you don't embrace this, how on earth you're going to be able to say, okay, I'm taking the next one? Because it's true, you got the stop loss over here. But look at this. Break, you waited, no entry. Break, entry, break, entry. You literally had back-to-back 3 more trades that you could have taken afterwards, right? Based on the understanding of what price should be doing next, just using this box as a reference. And look at this. This could have been a nice 1 to 5, right? Look at this. Well, nice 1 to, yeah, nice 1 to 5. Okay, nice 1 to 5, whatever. So there is no wrong for you to take this trade based on what we discussed so far and then hitting our stop loss. As long as you keep your brain sharp, as long as you embrace your losses, right? And you put the effort on carrying on and continuing with that, then trust me, there is nothing wrong at all. And here, the same story. Look at this. Why do you guys think, again, that's what I'm talking about. Why do you guys think that we have an Asian box, price comes down here, okay? This is not London yet. By the way, sometimes during Frankfurt this happens as well, but this is something I'll leave for another day. Now this is just focusing on London and New York. Look at this. Price comes over here. So the ideal play here would have been this taking out the Asian high and then going to the downside. You guys want to know something funny? I can bet 100% that there has been so many people, and I'm telling you so many people, that have definitely taken a trade over here, right there, after price has taken liquidity. New York session came into play, and I can promise you that so many people has taken a lot of stop over here, a lot of stop over here, stop over here, and stop over here. Why? Because all they're trying to do is trying to take the buy towards what? The Asian high. But what they forgot, and they did not look at it, is the damn order flow. And that's what I've been telling you guys about. Look at this. It's the same exact thing. Then it happened over and over again. How? Look at this. You got this order flow over here, right? And then price retraces. You guys can clearly see there's an Asian box over here. Price did not take that. And I'm sure again, here are so many people that would have gone for a buy. But damn it, why would you go for a buy if you know the order flow is bearish? The same exact thing happened over here. Look at this. High. It goes down. There's the order flow because that's exactly what you can see printed on the candle with a nice retracement. Asian box was consolidating here. As I said, this pattern would have been nicer, but it did not happen. So as soon as I see this break, damn it, I'm selling. I don't care of going higher. Do you understand what I'm sharing with you guys now? And this is something that so many traders are failing to understand. And this is something that people even charge so much money. I'm doing this for free. Okay. And this is exactly what I want you guys to understand. Because if we go to the chart, you can see that what we had over here, this pattern, right? Taking to the downside and going to the upside, it does happen. But look at the amount of time it does not happen. Here, we didn't have that. Here, we had that, right? Here, we didn't have that. Here, we didn't have that. Here, we didn't have that. Here, we had it. Low, up. Here, we had it. Low, up. Again, look at this. Didn't happen. Then, it did happen. So, I don't know what happened over here. I don't know why we got two boxes. This is pretty weird. But anyway, this is the key boxes. Here we had it. But now the question is, you see, didn't happen. Didn't happen. Oh, wow. How come? So you're telling me that this doesn't work? You're telling me this is a scam? You're telling me that people are selling a scam? Look at this. Didn't happen. Did happen. And didn't happen. So now imagine every time the price did not do the pattern you were looking for, like this one, like this one, like this one, and like, I don't know, this one, right? What you got to ask yourself is that, and that's how you make money. Now, let me tell you how you use the advantage of this. You got to go on the chart and do exactly what I'm doing right now, okay? Take all these damn boxes and try to filter out the amount of time this per GBUSD has actually played out. Like, look at this. I can already see from here that here we had only once that happened and then did not happen, did not happen, did not happen, did it happen, right? Oh, yeah, did happen, did happen, didn't happen, right? So we had it, no. So what you should be doing, and that's how you do, you take 1 month, 2 months, 3 months, you take like a long period of time, you start seeing how many times did happen and did not happen. Okay, these are the two key factors you have to play out with. Then once you have this data, you have to understand how many times you will have taken a stop loss when price did not do the both side of Asian high and low. And then collecting data about how many other times this has played out, and if that has played out, what is the average ratio of risk to reward you as a trader based on your knowledge are capable of taking the trade around this specific concept. Once you do that, guys, trust me, I'm giving you a step-by-step blueprint. Yeah. Once you do this and you start mathematically understanding, okay, how many losses do I have? How many minus do I have? 1, 2, 3, 4, 5, 6, 7, blah, blah. How many plus do I have? 2, 3, 4. This is the RR, by the way. 5. The maximum you can get, I think, is even 1 to 10. But depending, the average you will get probably is 1 to 3, 1 to 5, or 1 to 2 within intraday session, right? So for example, here, if you get a buy, that might be, depending on the time frame you use, 1 to 3, 1 to 4, 1 to 5. That's the average. So then you try to see your average versus the losses. And bam, that's where you get the right data for you to understand if this magic box is actually something worth playing around. Okay, because everybody nowadays is using it, but as I said, this is not magic. This is something that has always been there. Some people, they call it the power of three. Some people call it ICT invented this, blah, 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 whatever. But as I said here on my drawing, this is nothing new. It's not magical pills. It's all about the true fundamental nature of how price moves. So what I'm saying here, these candles, these boxes happens within intraday. If you go a daily time frame and you click on a daily candlestick pattern, right, that's exactly what you want to see. You see, here is where we had the pattern, right? Here we did not have that. So here is, you see, the candle goes down, then you wanted to see this candle taking price higher. But again, look at this, just through the candlestick you can see what? The order flow. If price would have gone above this candle, that would have broken what? The structure, right? But guess what? It did not happen. It did not happen. And indeed, if you go to smaller time frame, then in 1 hour, 5 minutes, whatever, you can see that those highs, this high has not been taken because the order flow was respected. Are you guys understanding what I'm saying? So basically, what you want to see, and every time you're using this concept, is you, hold on, what is it? Is you seeing that this box happens somewhere within this previous candle, not somewhere above this. And that's exactly where many traders fail. Because if that happens above this, that means the structure has been broken. Guys, this is the simple fundamentals, like the true nature of how market moves. I'm not making anything else. I have not discovered anything. What I'm sharing is the most valuable and the logic concept that you should be using in order for you to make a sense on what I just shared with you. So this is the very basic of the concept I just shared with you. And just so you know, guys, there are certain variants of this, right? And those variants are called Asian whipsaw. Oh boy, those are something else that not many people are talking about, right? Because it's complex, it's advanced, and it's pricey to know about. If you guys want me to make a video about the Asian whipsaws and different type of patterns, there are, I think, 3 to 4 patterns, right? They are must-known concept as well. That's something that happens many times as well in the market. I can help you to identify that. I can teach you how to identify that. I can do all of that because I've done it. Like, I've known it, I've done it. I don't personally, you guys know me, if you're following me, I don't personally use much of liquidity concept. I use them as a confluence because I'm all about order flow and structure. If you follow me, you know what I'm talking about. Then, if you guys want to know more, then make sure that you use these videos below here. And again, if you want to know more about Asian whipsaw, just leave a comment, Asian whipsaw, in the comment section, and I'll pick it up from there. See you to the next time.